Hey everyone, welcome to your daily update for Sol and BTC. It's been basically classic pump and dump. So I think it was the New York market from the looks of it triggered the dump. So they built all the liquidity, went up, took liquidity, and then went into New York session and dumped through all of the chasers. So when you look at the liquidity chart, like these sort of daily charts, you don't really see it quite the same, but this when you look at it from this perspective, you can certainly see how over time they built this liquidity by staying down here in this sort of low level and then started to push up through it, took all this, and meanwhile, all these people start chasing and they roll over and they come down. So if you paid attention to the levels from yesterday, where this hit was basically just key levels. It pushed up a little bit higher, like it could have rejected from around that 104,800, I think was the level, but it went up a little higher. It stayed up here for a bit while new liquidity formed below the price. And then as all this new liquidity starts to form and build, and then it comes down. And now the process begins again where it's forming above price. So they don't necessarily always take liquidity because you've got a whole bunch up here, but this eventually becomes higher time frame liquidity, and then as we step more towards a higher time frame move, then eventually they'll end up coming up through this and then finding their way up through all that as well. So unfortunately, as you can see, there is liquidity starting to form down here at 97k and 99k, and people are confidently 100xing this current dip. So down here at about 10794. Meanwhile, we have this band up here at about 102,800, and there's a pretty good chance they'll go and take that potentially even before you've read the video. There's some structure, I think, on the 4 hour that is pointing there at the moment. So, and looking at Sol, it's starting to form up down here below the price. So we're seeing liquidity down at about 148 and 149 and sort of around 150. So yeah, there isn't as many shorts coming in on Sol, but when you look at the bigger picture, there is higher time frame liquidity all the way through here on BTC as well, and there's also some higher time frame liquidity here on Sol. So we still haven't tapped the 163 levels. There's also some structural trends, etc., which could push us back to 169, and most of the big resistance is still sitting in the 170s. So it's because that bigger resistance is pretty high time frame stuff, it's possible that they just really want to go down and grab the lower liquidity before they go up. But we've had the 5-day move play out. So we've got a 7-day move, which I think I still have the chart up for, which hasn't triggered either side yet. So yeah, over the next week or so, all of this is going to get taken, but it's just trying to catch it at the right times. I am trying to find a better way of structuring these because I had a comment today, valid comment, that if you put these out before daily close, then you there's too many if this then that's, because you don't really know how the day's closed yet. But at the same time, the struggle is it takes about 1 to 2 hours at least to make and publish a video. If I actually wait for daily close and try to put these out, then it's too late. Some of those moves have already kicked off, particularly if you just want to trade within the day, because they can often quite quickly after the daily the new day opens, go straight to a target. It depends how it closes, but if they pause it like they did yesterday and they sort of shove it in between support and resistance, then it can sit there for a while before. Like I think we basically had to move a 1 hour, a 15-minute, a 1 hour, a 4 hour trend yesterday before we were able to start that daily move. So you had about 4 hours warning that it was gonna pop, and you knew by how they're moving the trends which way it was going to go first. Um, and then that's basically exactly how it played out. We had about 4 hours of liquidity building, and then off it went, and started the move up to take the liquidity, and then started the move down when everybody chased the pump. So it's Yeah, I don't really know a better way of putting it out there, but without just permanently being live all the time, really. And then people wouldn't always be there to watch it. But anyway, that's enough brain dribble. So let's look just at general sentiment on liquidity. So one day, you know, shorts are starting to come in, but unfortunately there's still a bunch of these longs. The way that they pushed the price down quite quickly too yesterday means that a lot of these longs are trapped and underwater. So, and the shorts, if they're overconfident because they haven't seen a pump, well, they're not going to close. Even if they go down further, they're just going to get greedier and greedier, and then when it hits some of those bigger support levels that are sub 100k, it could bounce back pretty quickly and just sweep through them, effectively trapping them the same way that longs got trapped by yesterday's price action. So if we look at 7-day sentiments, it's just so mixed on Bitcoin. Look at that, basically equal. So half the market is confident that shorts are going to win, the other half the market's confident in their longs. Sol a little bit more bearish. Um, and if we look at the 30-day, even the 30-day is starting to build up longs, on BTC. And the target liquidity is in all the places that we've been saying are potentially targets for quite a while now. I think we will build some slightly better support at the 99,500 level today on Bitcoin, but that might just give us a daily bounce if we haven't bounced it already, but we'll look at that on the charts. And Sol just needs a catalyst. Like there's so much liquidity to the upside on Sol basically, and all of these levels like 188, etc., even the 191, they are all structural targets. They're just high time frame structural targets. It can take a long time for them to kick off, and unfortunately, so are 130s and 120s, but because we're not getting the liquidity building to the downside at the moment, it's more likely that they'll sweep what's there and then push up a bit. So, you know, it's yeah, once we get some kind of catalyst on this thing, then it's definitely ready to go. Okay, let's have a look at these charts. So we have a prime day tomorrow. So expect chaos. Doesn't always happen because you could argue that we've already had a bit of chaos lately, but yeah, if they want to move things and not affect any large structure, then tomorrow's the day to do it. The way those will typically play out is if they do want to do some kind of big sweep, upside downside, they can actually spend a day doing a dump and then they can spend a day of capitulation because it's not until the end of the next day that they have to reverse what they did, or before the end of the next day, and that's when you'll get some more high time frame closes come in and the position of price then actually matters. So today we have a 1-day, 2-day, 4-day, 79-day, and a 158, which I might have forgotten to chart, but there is a pause button. So it was the best day ever when I learned the pause button. So yesterday they dumped the price down to be below the break level, but above the range trend that got created. It's a reverse side range trend on Sol BTC, and they haven't actually used it yet. So it's there is still a support level down there which can bounce the price back up. So this is pretty good if you're going into a prime day. It means that they can do a bit of a dump and then a pump, which is that kind of volatility that you expect to see. Now, we are closing potentially below the break level after rejecting off it, which is that 15283 level. However, it's not a distribution hard close. It's not a conversion to resistance. It's everything about this basically says that the price can still move up if it wants to, and if it was to sweep the trend, it would run into support. So, you're really looking at a setup for a liquidity sweep or a dump and pump or a pump and dump. That's basically what that looks like. Just looking ahead at weekly close, we've rejected off the range trend. We've not quite hit the exterior support trend. We haven't hit the break. Yeah, 4 days to go, so this can still dump further if it wants to. It could find support down here in that 141 4-hour area, and there isn't really, once it taps this trend, which is it never quite tapped, which is what about 14906. Once it taps that properly, it could bounce back up to the 16s. It just has to do it in these 4 days because it hasn't technically lost the range trend if it does it in the next 4 days, because it can still flip the candle to being yellow. And I think that would also, it would be, oh no, that did get retested. Yeah, so it's but hard to say what that's going to do, but it's in a position to basically go up or down over the next 4 days because nothing in there is really broken yet. Okay, let's have a look at the safety assets. So just see how this kind of thing plays out. Yesterday we engulfed, which created a support level here at 67.34. So there's a really localized range move, like aside from all the bigger stuff that's going on around it. But we also created this range trend across the top here. And that meant that if we were to push up from underneath the range trend and run into any kind of resistance, we're almost certainly going to come back down because you're sort of, you're I don't know the best way to explain this, but you kind of, if you imagine you get a bungee cord attached to you because you're under the resistance, the new resistance, and then you can just stretch and stretch and stretch that bungee cord until you grab some liquidity, which in this case is the liquidity from the break level, because everyone thinks that if they put a stop loss here, they'll be safe, or they put it above the daily high, they'll be safe. And that stretches up through there, grabs that liquidity, but the bungee cord ends up pulling it back down. So effectively what you saw is you saw strength moving into alts. You saw strength moving into Bitcoin and stables, which was like market dump. Then you saw this pushing back down under the resistance, which means it's moving back into BTC, but more so alts, which then means you saw that pump. And then it lands on the support level down here, which is 67.34%. And it also hits the trend, and then the same thing happens in reverse, because trying to go through this trend and tap that support level means that the price then gets a bungee cord attached to it again, and it pulls it back up. So the close here is, yeah, if it closes just where it is now, it's pretty much formed a wedge, which is here, and one side's got a break. Typically, without even looking at the lower time frame, what you normally do is you find about the 50% of the wedge, and if it's below the 50%, it's more likely the downside is going to break. But you should really look at it from a lower time frame to find out what's going on. What we want to see is really the next candle to come down, or even this one to get pulled down before the end of the day and close under the downtrend. So if it does get back down under, where would be good? Probably under the start of the hold. So if it gets down under 67.33% before the end of the day, then you could see some decent continuation. Failing that, it's really just going to be a case of this prior broken trend coming through here, which is about 67.54. The range trend again, maybe that could stop it, which is about 67.67, versus the trend support and the hold trying to move the price up. But there's not much else has really changed there. This level down here is going to be relatively strong support. So 66.86 on the daily. Even if it gets down under the trends, if it pushes down into that, then it could bounce because of coming from the top side. For a continued breakdown, you really need to see a daily candle close kind of just really sneakily under one of these trends at about 67.05. If it closes under the trend, it can use the backside of the trend to then try and push down through these support levels before they push back up again. But yeah, unfortunately, that's still pretty good support. If you sort of zoom out, you can see that really all it's doing is holding that daily range. Just holding. It's not until you get a full body blue distribution candle under that alts really have much of a chance of bumping. Okay, so if we look at that on a weekly, so the weekly is just clinging to the backside of the trend. All you need is 1 week to close blue, and this can take a dump because it's riding the wrong side, of the support, which is typically when this happens, it's when you hit one of these weekly levels again. Like it could happen with this week. Technically, it could come down and close down because it struck the weekly origin last week. But maybe it has to happen next week. You know, it might go up, hit it one more time, and then it's just the combined force of being wrong side of trend, origin level, failing to get back to the origin level again this week, and then if it hits it, 68.47 next week, that could be enough to send it back down to this hold level down here at 66.48. Okay, so let's have a look at totals. So we've been pretty spot on with the totals the last few days. So we had a candle that pushed up into the resistances that are up there at about that 327, 329 area. We rejected. If we were to go, higher, we might have got to that 3.34, but there was just too much resistance in there. This one's going to be below the trend, and if it closes blue, it's a bit of a mixed bag scenario. Right? So we can really forget this range now because this range will get broken when we close. So what happens is the trend interior is going to shift to the bottom of the new candle. Now, that gives it something it can bounce off and test some resistance. Now, it depends on how bullish, bearish you want to be, because there's plenty of places this can go, and there's just places that it won't go. Okay, so firstly, we are under a whole heap of arrayed downtrends. So for this to really push up, it's got to spend time to get through these, or it's just got to have some kind of major liquidity injection, like some kind of massive volume input, which can happen. Like that's sort of the point of liquidity. Like if you get a whole bunch of liquidity stacked through these resistance levels, because everybody is so bearish that they're all opening shorts, then when the squeeze happens, it can lift it right through levels. So that's kind of, the thing about like why you dump straight through levels like this one over here, which was about 3.29, there was just too much bullish sentiment. Everybody is long, and so then what happens is there's so much liquidity that they can push through them. And if the price doesn't go back up, it means that the buying hasn't come back again, and then you are now at a whole new level. So doesn't this kind of thing that you see going down can also happen in reverse. If everyone gets really, really bearish, then liquidity could be stacked all through these levels, and you could get that squeeze. And that's what we saw yesterday. If you're in the Discord and you were following, and I think I posted a message like, what would it take to get a little short squeeze? And then sort of half an hour later, you've got a short squeeze. That's what pushed up and took all the liquidity. So here's the tip. All I've been doing is watching that liquidity build and realizing that, hey, structure wants to go there. We haven't hit any resistance yet. And once the liquidity builds, then it makes it very easy for them to push through a lot of these, lower time frame resistance levels. So with this trend moving to the bottom, you could see it drop back to 3.08, but I'd be a little bit careful because we have got a prime day, right? So with a prime day, they will quite often just go for gold and they'll dive as deep as they can. And so we might see some of the lower liquidity get taken. But at this stage, the first point it could bounce would be about 3.08 trillion. And then the highest point it could go, given that they've already tested the hold level over here, would be up to the prior broken trend, which would roughly be the break level of this new distribution range that's formed. So that could see a pushback up to 3.29. So that would be quite a bullish move. Now, alternatively, they could just keep it in this area because you have got a trend at about 3.13. You've got this range trend that it'll be closing under the same sort of level, so about 3.13 as well. And you've got a prior something level that I probably should put a mark on. Okay, it's prior origin level that's been hard closed. It's been hard closed from the top side, and then it's getting hard closed again from the bottom side. That's up at about 3.18. So and there's trends up there as well that haven't been broken yet. Any of those levels could trigger a pushback again. Okay, so that's what's happening today, but it's you can see how going into a prime day and seeing things that are compressed in these kind of wedges, whether it's market caps or tokens, just allow them to take both sides over a 2-day period before the bigger, higher time frame stuff kicks back in, and we could end up being straight back here. Like you could literally end up with a 2-day close straight back here, or a daily close straight back where we started after wicking everything top and bottom. So you don't quite know what's going to happen off that one, but definitely something's coming. And the best thing to do on those types of days is not try to be greedy, just be conservative. If you're in a long and it's got profit in it and we start to hit these levels, just start to TP it out. And there'll always be another trade if it ends up going higher and so on. Okay, looking at the weekly is pretty scary, to be fair. It can still recover. It can move back up, but it's in a horrible place for if it closes the week here. So yeah, the week needs to get back up over 3.24 trillion really, because this would be a hard close of a range based on this candle up here as the whole candle. If it does do that, then 3.03 becomes the next target. If it closes below 3.03, then it's 2.83. If it closes below that, then it's down here at 2.62. And 2.62 would be a total market cap weekly retest. It would be so normal for that to happen, which is why I think you got to be really realistic right now about even, I guess, spot holding. The chances of a weekly range being retested are really, really high. It has to come after it's hard closed. So the wick of this yellow candle touching that line is not a break. Well, sorry, it is a break. It's not a retest. This blue candle is not a break because it's a blue candle, which means somewhere after all of this time, price is going to want to come back and touch this line. So when you have a whole candle where the fourth level, which would be the range bottom or the range top generated by this candle, when that lines up with a weekly break retest that hasn't been retested and the price is currently under, or the entire market cap is currently under a weekly range trend, then it's more a case of just, is it going to be a straight line, or are we going to have some more upside swing and then down? Like, how's it going to get there? But the chances of it going there are really, really, really high. Okay, so until it hits that level, don't think that the weekly structure is out of the woods. And if you sort of compare it to, you can also look at, say, the weekly whole candle down here and check to see, are we back inside that range? Well, if we close underneath, so this was the range top, and you can see the multiple rejections there, and then you can see the price has gone through it, and then you can see it was retested by these candles here to go up. Sorry if this is on a phone, but this is, you've probably got to look at this on a PC or a TV or something. So now we are potentially closing, if we don't get back up out of this area by the end of the week, we are potentially closing back into this lower range. So if you had to draw a box around these ranges, one of them starts here. That is a range, okay, and we escaped it and we retested it, but we didn't go higher, okay. And if you wanted to put another range inside that one, you could run a range off this candle here. So that would be that one. And this one failed to reach the range top. Okay, so this was where we were failing because we didn't get to 4 trillion. So that range started to fail, didn't manage to close above that 3.75. And then, of course, there's been a distribution range created, which is, well, the wee one based off that actually, but the more local one that we're in at the moment is this one. And that kind of sits, as you can see, the distribution range kind of sits within the two accumulation ranges. So yeah, you may come down and hit that if they keep on dumping it. And failing that, it all just comes down to whether it keeps closing below these levels as to whether the entire market just keeps on going down. But All right, oh, well, that's the education piece done for today. Boxes. How do I get rid of these? OCD. Okay, right, let's have a look at Sol. So looking at Sol on the daily, if they close it below, so there's a few different places here in close proximity. So we're going to break level at 155.071. Now this would be a hard close of the break level if it closes a blue candle here like this, and that is ultimately bearish. Okay. We've got a range level. So if we look at the whole candle at the top there, which becomes range after these two candles close. If we close this as a blue candle under 154.825, then that means that they want that 154.825 to become the actually that'd be the middle of the range. So, and then they're probably going to want to try and go for this 148.862. You can see how that we had all those various resistance levels yesterday that we spoke about, and I sort of said, you'd be really lucky if we got up to that 163. That's kind of about the top of it. But we also had this 160.8. Now that 160.8 is what they're attempting at the moment to make into the base of the distribution range on the daily. And then I'm not going to put one of those boxes on there. I hate boxes, hate rectangles. But down here at 142 would be the bottom of that range. So 148 would be the next step. 154, it may close under as it currently stands. If they want this to be a real quick dump after daily close, then what they'll probably do is push down a little bit further so that they can be under the range trend. If they close under that down facing range trend, then rejection could be pretty much instantaneous from that and then down to the 148 level, which is roughly where we have trends. It's also where we have an origin level on the daily, which is sitting there at about 147, and then we have another one sitting there at about 145. Now these levels have been tested before and they have given support before. They have not generated higher highs, which means that they're not the strongest levels. When it comes to origin levels, they may, and because they've been tested before, they might just give a smaller bounce and then give up. We do have bigger daily levels that are sitting down here at about 134. I think that one is. Sorry if I keep saying twos instead of ones. 134.535 would be another really strong support level, but there's also like a weekly one in between. So yeah, we may not see the daily. Not without a bounce anyway. So yeah, as always, we've got an hour and 46 minutes to go. If they choose to push the candle back up and close back inside the range, which means getting back up over 155.071, then it may not be as bearish, but certainly, as you can see by the way the price is at the moment, sell pressure, sell pressure, sell pressure. They've taken all that liquidity that they built to the upside yesterday, and now it's time to take it down and dump it lower. From the looks of that, it's looking pretty bearish. Okay. Now, if we step it up a notch and have a look at the 2-day close, we're going to have resistance at 157. If they really want to tank this thing, they're going to try and get the price down below 150.216. If they really want to nail it, then they're going to go down below, 145 or whatever. I mean, if they go down before 145 by the end of the day, this thing is going to absolutely be decimated. If they do that before this close. So, getting a lot of alerts. They are pushing down. So, next levels on for the 2-day, if they do manage to form a 2-day range here, is going to be 137, 125, and 112, for the complete range. And it's looking pretty brutal. So there is a 2-day, or a couple of 2-day levels that might support, one being this 146 level, which has supported prior. and then you're down to the 141, which is also the weekly level, I think. Just get down to this 141, 350. So yeah, it looks like that could get pretty bad. So to make this not so bad, they really have to get back up above 157.939. And you may get an interior trend like this today. So again, it depends how bearish they want to be or how bullish they want to be and where the liquidity is at the time, but they could bounce this trend, and it may be the smallest bounce ever. Like it could just be a bounce of say 152.3, maybe up to 154.8. It could push up to 156, 157, or even the trend, which is about 161 again, right? So it could do any of that, but it all sort of depends. There is a slight case on the 2-day here that it can still go back to 166, and that's just because it hasn't really hard closed that level. All of this stuff hasn't technically broken that 166 level yet, so that would require some kind of pump. The daily resistance sits before that. All these trends exist before that, so it's overall it's nice to have hope, but you've got to look at that from a pretty bearish brush. It's pretty bearish. Okay, now the 4-day. Okay, so all of these big interior trends that have been running through up here at about 180, they will likely shift today based on the 4-day, just if this candle closes blue. They'll be on the underside of it, which means, I'll just see where that's going to give it. Yeah, which means you could get a bounce. However, it is hard closing 161. So it's hard closing this level here with a blue candle today. It's creating a hold level at 154.9, and the bounce could be really small. So it could just bounce off the 151 trend. It could stop at the hold level at that 154, or if they want to try and drag more liquidity in, they could sweep back up and do a retest of that 161 level, which I'm looking on my other screen at the moment, which you can't see, but it's yeah, if they did go back up to that 161 level, that would basically just be like revisiting yesterday's top for a double top. That would definitely bring in more liquidity up above, which makes a bit of sense if they then later want to take it. So yeah, so they could be really bearish and just hit anything from 154 and then just dump. We are 147 is a support level here. 141 is a support level here. Yeah. Yeah. If it'll be a sign that they are intending to go up if they bring this candle back up before the end of the day. So an hour and 40 minutes to climb back up above 154.952. Okay. And this is the 79-day close. And what we absolutely do not want to see here is a close below 149.980, because that means 110 is simply the next step for that range, which is an absolute big drop. In fact, it's straight through the range base and everything. So support for this is about 120, as it currently is. The rejection that created this was the origin level up here at 246. And we are going to shift trend to the bottom side. Geez, that's absolutely uncanny. Look at that. It's perfectly lines up with the new range trend. So we get a new range trend forming. We get a shift of this topside broken trend shifts to the wick of that candle. Just when you think you don't live in a simulation, eh? The lines line up. So we're going to be opening just right here at this cross, which is just a horrible place to open a candle. If it was to push back up and have a little rally before the end of the day, and it probably would have to be 155, 156 sort of area, then it may open just with the ability to bounce on that new trend and then head up to the 170 area again, or 171 sort of area. But yeah, if it closes below the 149.980, it is toast. And there'd just be too much. There'd be the range trend that it'd be under. It would be basically opening on the underside of all of this stuff with a target of 110. So just, yeah, that's a goodie. Right. That was the 5-day just from yesterday, just so you get a bit of an idea about why we do this kind of stuff. These shorter time frames tend to play out faster, and so that was basically just a push up to that resistance. So we hard closed on the 5-day. The 161 is a resistance level. We pushed up to test it, and then we dumped back to the trend. So that was everything that happened was just that. Okay. Which means we do have things like this, in play, which this is the 7-day. The 7-day, the trend moved, it's sitting at about 148. The first resistance is up at about 168. Could be a good move to use for a prime day. They might come down, hit the support, and then maybe push up to retest the hard closed resistance. This move technically can come all the way up here to 175, and it's got about 6 days left to go on it. So, sort of fits in with the mold. You might get a sweep of this and then a move back up, and then when we look at this again in the next, when we look at this again in say 6 days time, what we might see is some kind of doji candle, which has come all the way up here and come all the way down here, which is about 140. So, you might see something like that when we look back at it. We'll just leave that open, And what I would do if I was you is I would just put an alert on this 140.254 level down here. Because if we touch that tomorrow and you start to see buying pressure and momentum coming in, then you would know it's kind of all part and parcel of this thing. This plus prime day equals sweep of the trend, and the chances of it then going back up is pretty high. So that's what we're looking at there. Of course, it could go the other way too, so it's probably worth. I've already got an alert on that one, and I've already got an alert on that one, so it's probably worth having alerts at 168 and 175 as well, just in case it goes the other way first. Take profits, look at shorts. Okay, that's what we have on SOL. So let's look at BTC. Okay, so BTC looks a bit nasty. Yesterday we got that engulfment. We created the range. We opened above the range trend. So the range trend pushed up into the hold. Okay, so that was the trade. That was the long. And once you hit the hold, it pushed slightly through the hold, hit the trend. But really, you should have been taking TPs at around that 104 area. Anything above that was, actually technically you should probably be taking TPs at the 103, 455, and then the 104 area. Anything above the 104 was just, random if it went that high. There's just too much resistance there. I think it's pretty much what we said yesterday. Now, it hasn't at this stage held the range trend. It's now down below it. It also has not broken it either. It has hit the daily break. So it needs to spend one more day not touching at all the current daily break, which is 101,333.3. And if it does that, then it converts that into the base, and then it tries to create a hold, and then it tries to create a range, to go up to the upside. Had a big chat about that in the Discord yesterday about how that all works. But it's also hit the prior origin level, which was the support here at 101,041. So that was created back here in June. So it's not the first time that we've bounced off the support. The first bounce didn't really manage to break many of the trends. It managed to get through one of them, and then it kind of failed trying to get through the second one. So it hasn't formed a new high. We're still in a downtrend. As far as levels go, if it closes the day between 101, closes the day below 101,499.3, then it's going to try and escalate the second step down to here, which is that 99,543. There is support there, but chances are that support's not going to hold. Mostly because if we look at this 99,543 level, it's got perfect confluence with this daily range from 23rd of June that was hit on the 4th of November, hit again on the 5th of November, converted to a high time frame support on the 6th of November. Hope everyone has seen this because here's the secret sauce. And then it was bounced on the 7th of November because it converted due to the failed distribution back to the level. That's what created this bounce, this whole thing to the upside. Okay, so it's got confluence to come down and retest that again as support. Could it move up first? Well, it could. So if it closes here and it hasn't gone and dumped the candle below 101,499.3 before the end of the day, then it could push back up to test this sort of 102 area. The bearish thing would be sort of just a touch of that trend at 102 flat. The more bullish move would be up to this trend, which hasn't technically broken yet, and that's about 102,700. So they have choices. Like, that is not actually resistance, but it could become it. So it's kind of a very polarized level. Likewise, 103 becomes, I think, based on this close, 103,034 definitely becomes resistance. Yeah, so that was a prior origin support level. So yeah, that's definitely, that 103 level is definitely resistance. If it pushes through a little bit higher, it could come back and test the range. I mean, any of these numbers are technically resistance. 103,455, 104, they're all resistance. So yeah, it just depends on how quickly they want to dump it. They might just tap the first one and go, and then it just has to compete with most of these trends until it gets to that 99.54 level, and then because it's already been tested, the next level also has confluence, which is this 97.587. So it's got confluence with something from the past. Oh yeah, okay, so that's a retest of a broken origin level, which has not been retested yet. So it's really, really, really highly probable this entire range will play out. It's just whether it goes a bit up and down as it does it, or whether it just takes a dump. It's looking, there's so many reasons for it to come down and touch these lines. So that's BTC. And if we look at the 2-day, so 2 days looks like, so 2 days in the support candle, it might push back to the 102,975. Just looking across on my other screen, I can see this fractally on a lower time frame. When I hold my cursor over here, I can see what it looks like on an hourly chart. And it's come down and it's hit this support, but it hasn't moved back to the minimum obligation yet. So if it engulfs, so this is sort of what ranges look like when they're really just fighting each other to flip. If it engulfs the 102,265 level, then that minimum obligation lines up with the 1-day chart there at 99.574, so it's probably going to go there. Could it shift up first? Yes. Could it follow this one from over here and go up and retest 102,975? Yes, it could do that as well. So it probably just depends how it closes. If it closes below the hold, which is 102,265, then it's more likely to go down. It's going to be on the top side of the trend. Yeah, it's a toughie. It's a toughie, this one. telling the direction that something's going to go first is probably the hardest thing you could ever do, because really ultimately it comes down to liquidity. Looking across at the 1 minute charts at the moment, people are chasing this dump, which in the 100x leverage, I'll just drag it across so you can see this. So this 100x leverage is sitting here. These are the new settings I've found for this free indicator too, as well, which I mentioned the other day in the Discord, which actually gives you a bit of a directional bias, which if we see it go to around that 102,600-ish first, then hey, those settings are kind of working. If not, then oh well. Heat maps are what they are. So yeah, we might get a push back up here, but that'll be into resistance. So then, yeah, guess what? It's going to go down. We're also going to get a range trend. So that range trend is going to form between this whole candle and this distribution candle, and you can see we're sort of just potentially going to open in there. Now the obligation for that range trend is only really to bounce up to first resistance, which is 102,265. So yeah, it could just be a little move in there, not a huge move. Now, if it does come down and close below the wick, which is 101,333, it's toast. Then, because you'd be making a trend, but on the wrong side of it, and your first resistance would just be right where you're closing. So that's how you just create an insta dump. Okay, so looking at the 4-day. So we don't want the 4-day to engulf because we don't want to be stuck in this thing for much longer. So 101,424 is the level we want to stay above for the 4-day. But as you can see, that looks like they're going to try and close below the range trend. Not 100% sure if this is the accurate range trend, just because it's kind of anchored off the bottom of that scammy wick from October 10, whereas this range trend that's in here coming through more so at about that 103 area seems to make a bit more sense. It did reject, etc. 2 times. Liquidity swept on that one, created the initial trend on this one. So yeah, I don't know 100% about that. So if that bounces, really it's just 104s. We are going to get an interior trend today, just coming through here, but it looks like it'll either open on it or on the wrong side of it. So yeah, don't know. It's really not a great place to be. Whatever you do not want to see that last minute sell pressure come in and push it below 101,313. That would just be a nasty place to have that candle. Yeah. Okay. And now let's look at the bigger stuff. And we've got the 79-day close today. It's going to create a hold level at 505, 500. It ain't going to shift a trend, so there's no real support for this until you get all the way down to 83. It's probably, if it takes a dump though, rather than going to 83, what it's most likely to do is hit this 93,500-ish level. So between 93,500 and 93,740, because it's either going to reject the creation of a range base, which is one option. So that's where it moves from. So everyone kind of knows this as a fib trade, but now you're sort of, if you've been studying fib trades for a while, now you can see how a hold level goes to a 1618 because it is attempting to either create a range base. So this would be the range hold. This would be the range base. If it does successfully create a range base, then the range goes to $36,000. People don't want to hear that, but that is the truth. And but any level in between could create failure and reversal, and that's why you quite often see things like hold candles that sit in places that line up with these levels, because this level here at about 72 to 70, 72, this trend that's coming through here, a prior broken trend, that's sitting at about 75. Any of these levels, or the current trend, which is sitting here at 83, any of these levels could get in the way of that actually fully creating this range. So, but you have to be realistic and say that, hey, bear market could be coming. The bottom of the bear market could be $36,000. But that's the absolute truth. So, most bullish scenario is that this close finds its way down to this 93 to 93,500, 93,700 area. It rejects the creation of a full distribution range, and then it travels back up to attack the hold. Right, that's the absolute most bullish scenario, but I think it's pretty unrealistic to say we're not going down into those 90s because there's too much stuff pointing there. Okay, that's BTC. Let's have a quick look at Tesla. Okay, so Tesla on the daily, what we needed is we needed it to open on the top side of that trend if we wanted continuation to the upside. Unfortunately, it's rejected range creation at 447. It's opened the candle on the underside of the trend and it's come back down. So now it's going to have to try to find support on this level that it's hit here at that 427. If it wants to get to the upside, the next candle really has to open above all of this mess because this is all going to become resistance otherwise. So yeah, if the next candle opens, it's going to have a hold. It's got to break that. So 438. You really need this daily candle to open above 435 to try and challenge that hold at 438 without the resistance of the trend, and then maybe it can go. If it can engulf this candle past 451, close up in there, then it might be able to create a range to the upside, but that's looking at this stage a little bit bearish. It's holding trend, and it's got lots of support in here, but yeah, it's also fallen back under that dang range trend again. So yeah, okay, let's see what the weekly looks like based on that. Yeah, so I said yesterday when you open in that cross of trends, you'll typically bounce between the two of them. We'd bounced to the upside. We hadn't touched the bottom side yet, so we were probably going to go down, and guess what? There we are. We've gone down. This is highly predictable behavior. There was an influencer online actually today who posted something about how once we get regulation and laws in crypto, then everything's going to be different. But it's just like, well, Tesla just does exactly the same thing. It's just all these laws that are coming just past the who has oversight just changes from people in the world of crypto to big TradFi and institutions. Is all it really does. I don't think we're going to change the way price moves. It's been this way since they digitized a gold chart, and I don't think it's ever going to change. So Tesla, if it closes down in blue for the week, it's going to lose the uptrend. And then it's all about the wick. If the wick is short, it'll probably just keep cascading. If the wick is long, it might find support and bounce back up. If it closes under 415.08 for the week, then it'll be attempting to create a distribution range. It's highly likely it at least goes to 415 based on this hold, but it's really about does it close underneath it and does it continue to break down through the levels. But yeah, it's looking at this stage, you'd have to say the week is flipping bearish with 4 days to go. Okay, that's us for today. Like, subscribe, and see if you hopefully get some trades out of those levels. And if you're watching this and just have really no idea what the heck I'm talking about, there's an educational playlist you can look at, and that will sort of give you some idea. And then I stress this jump in the Discord because even if I'm not always available, there are people in there of varying levels of understanding, and they're all getting it. A lot of them are getting it now, and so there's people in there who can answer the questions, and everyone's helping each other out to make wins. And some of the comments and thank yous are awesome. Yeah, let's keep going. Path to 1,000 followers sounds kind of pathetic when you think about these people out there who are literally just posting rubbish noise charts or no charts or stupid noise narratives, and they've got 250,000 followers. But you know, we'll be more profitable. All right, we'll catch you later.